Hey there, and welcome to Swimming with Sharks. I'm your host, Kevin Dean, CEO of Manobyte, and I'm thrilled to have you join us as we navigate the fast-moving waters of AI enterprise. Today, we're going to dive into the fast currents of the AI supercycle with someone who's not just watching the wave, but building the jet engine to ride it. My guest is Adam Patti, CEO of Vista Shares, and the visionary behind the AIS ETF. It's a fund that's not chasing hype, but capitalizing on the backbone of the AI revolution, infrastructure. This conversation is packed with insights you won't hear on CNBC. Adam breaks down how to invest in the picks and shovels of the AI gold rush, why the real alpha is hiding in the plumbing and cooling systems of the future, and what it means when your data centers use as much power as an entire city. We're going to talk ETFs, semiconductors, energy crisis, job disruption, and why white-collar work may be the first to go. Oh, and we're going to rock out at the end with some Scorpion references. So you're not going to want to miss this. So strap on your fins, because this is one of those deep dives into AI and how it's reshaping the investment landscape from the ground up, literally. But before we get started, I want to talk just for a minute about how this is not just an innovation wave. It's an economic tidal shift. It's reshaping every industry, every role, every competitive edge that any company thought that they had. AI is projected to contribute over 15 trillion to the global economy by 2030. But here's the kicker. That value won't be evenly distributed. It's going to go to companies that act and not react. So the question isn't, should we use AI, but what's our strategy to win leveraging it? But strategy starts with education. As leaders, we can't afford to treat AI like something abstract, tech reserved for IT. We need to understand its capabilities, its limitations, and most importantly, its trajectory. Because if you're not learning AI, you're already falling behind someone who is. And this goes the same for your staff, your organization. You've got to be training everyone in your organization. Every department, every function needs to understand how AI will impact them in the future. Next comes data. AI is only as good as the information you feed it. That means no more siloed systems, no more half-baked dashboards. Clean, connected, contextual data is the new oil. And right now, most companies are still digging with shovels. Finally, we need to think beyond tools. AI isn't about automating what you already do. It's about reimagining how value is created. From sales to operations to customer service, it's not a feature, it's a force multiplier. This is our opportunity, not to dabble, but to decide, to lead transformation, not lag behind it, to build organizations that aren't just powered by AI, but defined by the intelligence we apply through it. Because this is the new economy, it's not the strongest or the biggest who thrive. It's the most strategic, most informed, most adaptable. So let's stop asking if we should adopt AI and start asking how fast can we lead it. And to help us understand what is required as we think about our investment strategies, I'd like to welcome our guest. So Adam, I am so excited to chat with you today. Thanks for being on the show. Before we dive in, we got a lot of cool things to talk about. Can you give the audience a little bit of your background and how you got to where you are today?
Sure. Well, first of all, thank you so much for having me. I'm really excited about this. I've spent most of my career in the financial services business, specifically in exchange traded funds. So I've been in the ETF business since 2001. I started my first company in the space in 2006, where we focused on kind of institutional class alternative investment strategies and embedding that in an ETF structure. I built that up and sold it off to New York Life in 2015, built it to around $5 billion in assets. And then I spent time at New York Life for 3 years, kind of building out their global ETF platform there. And then I left in 2018, and I had a non-compete for several years, so I was stuck out of the industry that I love. But fortunately, a little over a year ago, I was able to get back involved and try to build another company.
So tell us about AIS. What are you guys doing? What's this all about?
Yeah, so AIS is our AI infrastructure fund. That's the ticker AIS, and it was our first ETF we launched. We launched it back in December under the VistaShares brand. We have several other products that we've brought out since then, and we'll continue to grow out that suite of products. But this was really interesting. So my partner in VistaShares is a gentleman named John McNeil. John was the president of Tesla early on until they hit about $20 billion in revenue. And he's on the board of General Motors. He's vice chairman of their autonomous vehicle division over there, Cruise it's called. Just an incredible talent, a brilliant guy. And he was on, I think it might have been CNBC, and I think it was Joe Kernan who was interviewing him, and they were talking about how to invest in AI. And John at that time said, well, there's got to be an ETF for that. And that was where they left it. So, but when John got off the show, he started looking around to see if in fact there was an AI fund out there that accurately captured exposure in this incredible space. And as it turns out, there's a lot of AI funds out there, a lot of AI ETFs out there. But if you look under the hood, and this is what investors need to do when they invest in any fund, ETF, mutual fund, whatever it is, you really want to see what you're buying. So when John looked under the hood, he said, wait a minute, 40% of the exposure in these funds is all Mag 7. So you're getting the Googles and the Metas and the Apples and all those funds.
All the big tech companies.
All the big tech companies that frankly, everyone's already invested in those. Not everyone, but most people are. If you own the S&P 500, you get a lot of those, right, in your top holding. And then people own them as single stocks. They own them in different funds. And the reality is that those are not AI companies. And one day they might be AI centric, or the core of their revenue might be coming from AI. But the reality is that they are not. They are the company, the hyperscalers they call them, right? Yep. So these are the companies that are putting hundreds of billions of dollars into AI infrastructure, and they're doing that because they need to drastically increase the level of compute to enable them to create consumer applications that add value for their customers, and that one day will generate income for them. But they're not there yet. Yeah. So the first step is to build out the infrastructure. And that was the epiphany that John had. It was, just a brilliant insight that says, wait a minute, how do we get exposure to where the profits are? The profits are in the companies that are building data centers, that are building semiconductors, and the overall infrastructure for the AI industry. And that was kind of the genesis of how he wanted to get into the ETF space, with that single idea of creating a better methodology that can be applied not only to AI, but to robotics and space and all these other, what he calls super cycles.
Yep.
And what's interesting about the super cycle concept is that, and he says it brilliantly, I'm going to mangle it, but, if you look back over the last couple of 100 years, there's never been a time where there's been more than one super cycle occurring at a time and at one time. And a super cycle is a kind of long-term disruptive technology that's changing the way people live and work. Yep. And so the last one was the internet. That was the last super cycle. But now we've got AI, we've got robotics, we've got electrification, we've got space and biotech all converging with AI really as the underpinning of all of it. And that, it's a really interesting concept. And so that was how VistaShares was born. And our first foray was with the AI, with AIS.
So this is super cool, and there's a lot to kind of drill down into on this right now. So I want to geek out just a little bit with you. So let's talk about the AI super cycle. Like, how are you guys defining the criteria for what gets included in those type of companies that you guys are thinking about?
Great. So if you look at the supply chain, or you look at the AI industry, it goes from the chat GPTs, which is the front end consumer facing application, and it goes all the way back into the supply chain of all the companies, the picks and shovels that are building the data centers, that are building these high performance semiconductors. So, but if you look at where the profits are, there's no profits on the front end right now. All the profits are on the back end. It's the companies that are building the infrastructure. So that is where we started. So the first step was, let's define what infrastructure is. So to us, infrastructure on the AI space is data centers and semiconductors. Then once you've established that, you need to analyze the supply chain. So what are all the different components that go into building a high performance AI data center? What are all the components that go into building a high performance AI semiconductor? So you map that out, and let's just use data centers for an example. It goes everything from cooling systems to fiber optic cable to racking systems to networking equipment to all the things that go into building the physical plant. So that's analyzing the supply chain. But then, okay, that's interesting. But then how do you know which components are more important? So this guy, Sunny Madra, excuse me, who is on our investment committee as well. Sunny is the president of a company called Grok, one of the premier AI companies privately held in the world. He and then some of their really smart friends in the space, they mapped out the bill of materials. So taking the supply chain, you overlay the bill of materials. So, okay, let's say power and cooling systems.
Yep.
How much of an AI data center, how much of the cost of an AI data center is in power and cooling systems? How much in racking systems, fiber optic cable, and so forth? So you go down the list and you come up with, for instance, cooling systems is 30% of the cost of an AI data center. So wait a minute, that's important to know because that's a big piece of the puzzle, and there's a lot of capex being deployed into those cooling systems. So you lay all that out, and that is kind of the core of the methodology where we call it bill of materials methodology. Very simple. We've actually filed a patent on it. So that was kind of the step 2. Step 3 is, all right, once you have the bill of materials, you have the supply chain components. Then you got to find the companies. So then you map the companies to each level of the supply chain. So let's just keep using power and cooling. Yeah. Let's say there's 8 companies that play in that space. I'm just making that up.
No.
But so maybe they're in the cooling business. Okay, we don't care about that. Maybe they're in the cooling business for data centers. We don't care about that either. What we care about is if they're in the business of AI data centers. So that's where the hard work comes in. We have to dig into the financials and the publicly available news provided by the companies to understand, what does their pipeline look like in the AI data center space? How much revenue are they getting in that space? So we'll do all that work across every single layer of the supply chain to make sure that, at least, we set it a level of 30%. At least 30% of their revenue is coming directly from AI projects. Now, we want that 30% to increase, but of course, it's a growing industry and it will increase, but 30% we thought was a good starting point. So that's kind of the hard deck. If you don't get at least 30% of your revenue from AI projects, you're not in the product. Yep. So once we've analyzed all that, we roll up all those companies, both on the AI data center side and the AI semiconductor side. We went through the same analysis there, everything that goes into building out a semiconductor. We roll that all up into a core portfolio, which is around 80 companies.
Yep.
And that is the core of the portfolio. And what we do is we rebalance that twice a year. So the next rebalance is actually June 30th, where we'll rerun all the analysis again to try to see what's changed, what companies are more important, less important. And that is the kind of how we, build that core portfolio. And then I can get into the active component, but I'll stop there because it's a lot to throw at you.
Yo, this is so good. So it feels like right now what we're seeing a lot of is this gold rush mentality around AI, but it seems like the AIS stuff is more like pick and shovel, tactical, let's, focus on what's really happening right now. Was that the goal from the beginning to build this foundation this way? And how do you know, and why is this something that people need to be thinking about?
Yeah, so that is exactly the goal, and the reason being is that if you go into our portfolio, you'll recognize some of the companies, but most people won't recognize most of the companies, and that's the point. You want the companies that you don't know in your portfolio to diversify your portfolio. You don't need us to give you exposure to Apple or Amazon or Meta. You don't need us, and you don't need to pay us for that. What you need to pay us for is to find the companies you don't own and never heard of, or at least don't have exposure to, that just happen to be getting 30-50% of their profits and revenue from AI projects. That we think is the kind of these are the hidden gems in the marketplace. And the way we expand upon that is, we're an active fund, so we have a rules-based core. So this way investors can see, well, why is XYZ company in the portfolio? They can look in our rules and see exactly why it's there. We think transparency is important. But the secret sauce is really on the active side. So in a really fast-moving industry like AI, you need people who understand the business overseeing the portfolio, because your average Wall Street analyst is looking at the numbers. They don't know necessarily what company's technology is better than the other, who's winning deals, losing deals in real time. So, our secret sauce is really on the active side. So we have an investment committee made up of John, Sonny, who I mentioned, Professor Robert Whitelaw, who is the chairman of the finance department at NYU Stern School of Business. He was also the dean of the undergraduate business school, brilliant portfolio construction person, and then myself. I'm the weak link. So the four of us, our job is to, we break it into kind of the practitioners and then the portfolio construction people. So the practitioners are John and Sonny. Their job is to identify risks and opportunities. So we're not waking up in the morning and saying, let's start trading stocks. We're waking up in the morning and saying, did someone's technology just get usurped by somebody else's technology?
Right.
Did XYZ company just lose a massive project in Dubai? We want to know those type of things. And once we understand that, then if we need to make a change in the portfolio, then it kicks over to Professor Whitelaw and myself to try to express that into the portfolio or pull it out, looking at all the risk parameters, the weightings, and making sure that everything is done, properly from an investment process perspective. So, we think that's really important in a fast-moving space. And, and I can get into it, but, we've actually only made 2 trades so far. So we're an active fund, but to your point, it's about having the right core portfolio and then really monitoring it and only making trades when they're necessary.
So this is so important and so critical, especially right now. So I'm so glad that we're having this conversation, because we see this whole AI infrastructure space evolving over the next 3 to 5 years. Okay, so it's important right now, super important. But what happens, 3 to 5 years from now, when a lot of the core infrastructure is in place? How does AIS stay ahead of the curve as this landscape matures?
That's a brilliant question, and you hit it on the nose. So, in our rules, in our methodology, in our investment process, so there's actually 3 supply chains identified. There's the data centers, the semiconductors, and then the consumer-facing and business applications. So right now we zero out consumer and business applications as a supply chain. We do not address that. But to your point, as the industry evolves, that part of the business is going to start generating profits. And we want to start being able to feather that into the portfolio. So right now it's at a 0 weight. But, in 3 years from now, maybe it's at a 33% weight, or maybe in 5 years at a 100% weight. I mean, I'm speculating, but, we don't know. But you need to have the flexibility to evolve your investment process as the industry evolves. And then, of course, from an active perspective, we could always add in any components we want if things change quickly. So we can make that change.
That's awesome. So it seems like there has to be this balance, short-term and long-term, of diversification, but staying true to the core of what this is all about. How do you make that balance between staying true to the theme of what you guys are doing versus diversification that need to happen over time?
Yeah, it's a great question. So yeah, I mean, we need to. Well, I mean, you have to be disciplined, right? You have to be disciplined because it's so easy to go off the rails and just say, I don't know. I'll use it in Palantir. Wow, that thing is booming.
Oh yeah, Palantir.
We know it's going up again. We can put it in the portfolio and get some juice on it. It's tempting, but if it's not within the rules or it's not within our defined investment process, unless something has changed in the industry, we're not going to be chasing returns. And that's we think is important over time because that's how you get yourself in trouble, right? Investors, they're chasing alpha, they're chasing returns. And, you get yourself in trouble because generally you're going to be late on that and, get hurt. So we think just having a disciplined process that stays true to what we're trying to provide from an exposure perspective is very important, but have the flexibility to make those changes as the industry changes.
I love that. And so the industry is going to change as we know, but we're so early in what's really going to happen with AI. And do you feel like we're still, this building of the infrastructure is just preparing us for the mass adoption for what's to come? And can you think of, and tell me how businesses who are thinking about AI need to be planning right now?
Yeah, great question. So look, I mean, we are definitely right at the beginning, and it was interesting during the tariff tantrums, the AI narrative changed. Oh, wait a minute, maybe it's overblown. Maybe it's really the story or the fundamentals never changed, whether it was, and the stocks definitely got frothy towards the end of the year, and then they came down during the tariff tantrums early this year, which was a good thing, I think. But we're very early. I mean, if you think about it, look, I mean, all these hyperscalers, they're investing, hundreds of billions of dollars. That is not being deployed overnight. Those are multi-year investments that take time to be deployed and take time for this infrastructure to be built out. So, this infrastructure play, is at least 3 years, if not 5 to 7 years, in our estimation. Before, and it's never going to end because you got to continue to innovate. But in terms of this massive, $1 trillion investments that are being made, and they keep getting announced, right? I mean, Sunny was, at Grok was involved with that new project down in Saudi Arabia, the Humane Inference Center, right? Inference Campus, because it used to be all about training the AI models, and now it's about inference. So. And then it's about deployment, and so it's all going to change and continue to innovate, and you're going to continue to need that infrastructure to do that. But to your point, also, as these consumer-facing applications become more important, you want to have exposure to them as well, and we'll be ready to provide that.
Yeah, that is so great. I love this, and all the time we're talking to executives, business leaders, who are trying to make decisions on what they need to do from a corporate standpoint to start thinking about implementing true AI within their organization. And this infrastructure, in my mind, really just goes to prove the point that this is where things are going. And if you're not keeping up, you don't have your 3-year plan in place, you're going to fall behind in 3 years from now. So when you think about what you guys are building from an infrastructure perspective, what else do you see that's maybe not tied to your fund, but when you look at the broader picture, what else are you seeing that's important for people to think about?
The biggest thing is energy, right? So we're actually coming out with a new fund, an electrification fund, that's going to address this in a similar way as AIS does on kind of the core infrastructure. But, in Sunny, in one of our calls, I think it was last week, he gave me a stat that was startling. In 2005, the total energy consumption of data centers in the United States was 2 gigawatts. Okay. That's enough to power a city, right? But that was our national footprint in data centers. The data centers that are now being built by the hyperscalers, for instance, are all between 1 and 2 gigawatts by themselves.
Wow.
And there are, dozens and dozens of these things going up. And that's just the hyperscalers. Then you've got, the kind of the Musk, the Grok, XAI, they're in the 1 gigawatt range building their data centers as well. And then there's the kind of the data center the companies that just kind of build them on their own without, the backing of the hyperscalers. They're all in the, kind of in that 1 gigawatt area as well. So the problem is that the grid can't handle this power. It just simply can't. So what's interesting is that the people that are building the data centers are now building their own energy their own energy plants, generation plants on the campus. Yep. So they're taking them off the grid and building their own energy sources. Whether you saw, Meta, who just did a deal with a nuclear power plant from Constellation. Microsoft is doing one, I think it was 3 Mile Island. So, this whole nuclear thing is starting to raise its head again, and that'll be a whole supply chain right there of the micronuclear. But what the immediate issue is, and what I think a lot of corporations are looking at is, how do we get ahead of the energy generation? But then from an investment perspective, what we do, it's like, all right, what does that mean for companies and other investment opportunities? So, the second trade we made in our portfolio, we just made a couple weeks ago. So the generation facilities that are being built out are largely natural gas powered. Mm-hmm. Okay. Which is great because we have a ton of natural gas. We've got all the natural gas we want, but guess what? We don't have the turbines required for the generation facilities to deal with that. Yeah. So there's a issue there. Who makes the turbines? GE Vernova. GEV is the ticker. They're the leader in those turbines. So we put them into our portfolio as a high conviction pick, and now they're in our top 10. But the energy is going to be an issue for whatever industry you're in, whether you're directly touching AI or just using it for your business processes. And, companies are going to need to really be on top of that and understand how it impacts their business.
Yeah, that's great. So could you talk a little bit more about how enterprise leaders need to be thinking about infrastructure and, not just as a cost center, but also as a strategic differentiator?
Yeah, they need to map out their business processes, and I'm sure they all are, and understanding, where does the AI impact their business process, right? Is it a labor issue? Is AI going to replace junior employees? Is it a productivity or efficiency type of thing where, it's replacing compliance processes, or is it automating different processes that are kind of low value added processes at this point? And I think they need to map that out and almost put their wish list together, saying, if I can use AI, let's assume AI can do anything, right? What business processes do I currently have in place that are sucking up capital or resources that can be, cut out by the use of these new technologies? And, though that might not happen for 5 or 8 years or 10 years, maybe even, but if you get ahead of it, at least you can plan for it. And then you can start designing your infrastructure around that and plan for the energy needs, plan for, your staffing needs around that. So I think at this point, business leaders really, you almost have to shoot for the stars and say, this is my wish list of what I wish AI could do for me, because you know what? It's probably going to be able to do it.
Yeah, that is so brilliant. That's so brilliant. And so as we think about how you guys are having this major impact in investing in the infrastructure, you now are thinking about, energy and what that means. Those are just two key fundamental elements. We hear a lot of conversation about shifts in the job market, right? Just like you said, AI is going to be able to do a lot of what people are doing. Therefore, this infrastructure is being built. It sounds like, correct me if I'm wrong, but there's going to be some disruption in jobs, but what you guys are investing in sounds like to me like there's going to be this growth of jobs because of the needs on the infrastructure side. How do you guys think about that? And what do you, and does that go into your considerations?
Yeah, it's interesting, and it's still early days, but what seems to be occurring is that, people assume that AI was going to cut out blue collar jobs. And when I say blue collar, I'm including everything from, electrical engineering, and things like that, any building things, right? It almost seemed like it was going to automate a lot of that with robotics and things like that. Not necessarily electrical engineering, but other tasks.
No, we get it. Yeah.
Right. But to your point, I think actually those types of jobs are going to be in a boom cycle because there's just not enough people with the skills and the technical skills and knowledge. I mean, everything from plumbing to electrical to everything. I mean, all these data centers, they're all going to be liquid cooled. They're all going to, all the cooling systems are all changing to these new kind of plumbing systems, right? Liquid cooled systems that, you need special knowledge for that. You can't automate that. But what is being automated, I think, are the white collar jobs.
Yeah.
I mean, that is actually the twist that I see now that's become more clear over the last kind of 12 months or so. I mean, do you need a junior lawyer when you can have, you plug something into Grok or ChatGPT and get, a full brief written in 35 seconds?
Instantly, right? Yeah.
I mean, I've been using, another app, just playing around with it. And I've been loading in like all my components of some of my funds and saying, do an attribution analysis to see, what's performing, what's not performing, which timelines. And, in 10 minutes, I've got a polished analysis that, from what you need to go over the numbers, make sure it's right, but it's right.
It is right. And it's funny because we experience this, our customers experience it, like it's at a higher level of quality than we would get if we would have hired that white collar worker to do it previously. Like that's what we're seeing. And so, and to your point, like we have conversations with people all the time who are asking, about, their kids who are just coming out of college or just getting ready to start, where should they be focusing? And to your point, we're saying, hey, white collar work is on the decline, but blue collar work is actually on the rise. And there's a great demand for that. And I think that it will be for quite some time. I think that, we're just like you're saying, we're just at the beginning. This infrastructure is just going to continue to grow, and the need for energy is just going to grow. Like this is going to be what you guys are investing in is amazing, right?
It really is. I mean, then it goes to robotics, right? I mean, then it goes to biotech, and look what's going on in space now. I mean, engineers and people who build these things are going to be the people that are in the greatest shortage, to be honest with you, in my opinion. You don't need a junior financial analyst. I mean, you almost don't need it now if you just know how to use these tools. But certainly in 3-5 years, when those types of things are automated to a large extent, I don't know. It's going to change the workforce completely.
Yeah, it is definitely going to change the workforce, and how you guys are looking at investments is just, absolutely important. So, how do people keep up with what you guys are seeing? Like, where can they go to, understand more about how you guys are investing and how they can follow you guys?
Yeah, well, I appreciate that. Yeah, I mean, our website, vistashares.com, every other week or so, we put out a very high-level research piece on the AI space. Not a sales piece. It's a kind of an investor digest that goes through all the important news and information around the world as it relates to AI. And then we try to tie it back into specific names of companies that are benefiting or getting hurt by these trends. So we think that's a good piece to look at. We're of course on, social media on X and LinkedIn, and we put up, different research pieces and news and information as well. But I think it's, if you have the time, and I tell my kids this all the time, spend your time understanding this space, read the news, read about the companies building or innovating in the space, because it's just getting going and it's going to accelerate. And those people who understand the space are going to be a tremendous advantage, I believe.
Yeah, because this is not hype, right?
No, it is not. It is not. It's for real. It's for real, and it's getting more powerful. The whole trend is becoming more powerful. And again, we're right at the beginning. We haven't even built these hundreds of billions of dollars of data centers. Imagine when we have that compute up and running, what these large language models and even the micro agents, now we're going to more of more an agent based type thing where you can have a very tailored solution for a specific task. And that's really where the growth is coming from. These large language models are, good for certain things, but the agent-based models are going to be the ones that are, taking out specific tasks and automating them, speeding them up, making more efficient. And that's where, the big companies need to focus on, come up with what they believe their agents should be looking like and what can they be used for to improve their business.
Yeah, this is so important and so critical, right? We're just now getting started, and what we have right now is disruptive. Just imagine, like you were saying, 3, 5, 7 years from now, the disruption cycles that are going to be happening. And so we're so glad that companies like VistaShares is out there, paving the way for what we need to be looking at and how we need to be thinking about things. Adam, you have got to promise to come back 6 months. This might be a thing where every 6 months we have you back on the show to let us know what's going on and what we need to be thinking about.
I would love to. This is a lot of fun, and I love talking about it. It's just so much fun. You can talk about this all day. It's just, it bends your mind and it really makes you think, and kind of your creative juices start flowing, and it's a lot of fun. So yeah, thank you. I'd love to.
Yeah, this is I think I can tell that this is just like it is for me. I'm having the time of my life. We've both had great careers, but I'm just feeling like a kid again, man. This is exciting things happening right now.
I agree.
It's awesome.
I agree.
So Adam, you know that I am a big music guy. Love music. Can you give me a song that after this is over, I can go rock out to? What should I be listening to? Give me something.
My favorite, old school, right? I have no hair, right? So, Rock You Like a Hurricane by the Scorpions.
Scorpions, here I am.
I love it. My dream is to get on stage to give a talk about something like we're talking about today, and the song that comes on as I walk on the stage is
that opening is just so great, right?
The best.
There's no better way but to come into that like a rock star. I'm sure that we're gonna see you doing that one of these days, man.
Can't wait.
Love it. Adam, thanks so much for being on the show. This has been so much fun, and you're already committed. 6 months from now, we're going to have you back to let us know what we should be thinking about.
That would be awesome. I would love to. Thank you so much.
All right, buddy. Bye.
Appreciate it. Take care.
What a great conversation. Adam didn't just break down the AI infrastructure play. He built the blueprint. From high conviction picks like GE Vernova to why data centers are turning into micro power plants. Adam showed us that the real winners in AI aren't always the loudest. They're the ones quietly laying the pipes, spinning the turbines, and cooling the chips. And if you're leading a company right now, here's the wake-up call. Infrastructure is no longer a cost center. It's your strategic. The winners in this AI wave will be the ones who design for speed, scale, and energy independence. If this episode got your gears turning, don't let it stop at inspiration. Subscribe, share, and check out Adam's team at vistashares.com. So until next time, stay sharp, stay strategic, and keep swimming with sharks.